Hi, I'm Pattu for freefincal, and today let's discuss some questions asked by viewers. I started this last week, and this is the second such episode. So, so Millen says very good analysis for the Franklin USD bond. Thank you. And Santiswari Jana says, what is the point of taking such high risk in debt when you're already taking risk in equity? I suppose debt is for less return but with more security, kind of hedging to equity. That's a very fair and solid argument, and I, I, I I agree that is true. That is there are two kinds of risk in debt mutual funds. The risk that comes due to interest rates will gradually move NAV up or down. That kind of risk is acceptable for long term goals or even for reasonably short term goals. But the kind of risk associated with credit is very dangerous for any kind of goal. And yes, I agree that such kind of risk is not suitable for anything. Uh, Gordon says once collateral has this is a comment about the fixed maturity plan crisis, and Gordon has a comment uh, about the need for SEBI to handle this better. That's a comment. That's not a question, so I'll just leave it. You can go and have a look at it. So Rajdeep says, I must give credit to management team for generating alpha without significant losses. Yes, but that is speaking as an analyst. As an analyst, I can give them awards and credit or whatever. But as an investor, I must recognize that the law of averages will play. Sooner or later, they are going to be hit by a credit issue. And if you are playing with fire, you're going to. Uh, out of 10 times, once you're going to get burnt. That's nature. So as an investor I will not give credit. As an analyst I will, but we are looking at it as an investor primarily, right? So can you please suggest the best liquid mutual fund in terms of risk or reward? I am currently in UTA cash plan. I have not looked at it seriously. Parag Parag Liquid Fund has, in his very short history, has held a lot of gilt funds. I don't know if they're going to continue doing that. But Quantum Liquid, yes, that's what I use, and I recommend Quantum Liquid as well. And I'm fairly sure that will not get into corporate bad credit kind of situations. Of course, it's mark to market, so there will be ups and downs a little bit. But I think Quantum Liquid is what I would recommend. Nihal says only because it's past returns, everybody is after Franklin ultra short fund. All it takes is one default and a huge list of unknown portfolio for the NAV to come crashing down. I completely agree. That is essentially my point. Very few understand it. Please do not buy debt mutual funds looking at star rating again and past returns. This is stupidity. I cannot say this enough. Banking and PSU funds have have a high modified duration. Can we expect interest risk to be high? Yes. See, modified duration means what? Modified duration is a quantity that is given in terms of years. So, if a fund has an average modified duration of 2 years, it means if the interest rate changes by 1%, the NAV will fall by 2%. That's what modified duration means. So higher the modified duration, higher the interest rate sensitivity, and definitely banking and PSU funds all will have typically high interest rate sensitivity. Tuhin says, I was thinking of investing in this fund for a long time, was searching for some reliable source which has reviewed the fund in the past, finally came. Okay, can you please review Franklin India Savings Fund since you have mentioned it in that video? Let me just do that. Okay. Franklin Savings Fund is a relatively less risky fund. It's a money market kind of fund. I recommend it in my plumb line. Of course, I recommend ultra short term also in my plumb line. Many people do not know it. People who have been critical of me should understand that I have been recommending this fund with the credit risk disclaimer. Franklin Savings is a fund that has got much lower credit risk than this fund. But on its own, it will have some credit risk. That much you must recognize. I have a large amount in my savings for 50 lakh. Where should I park it? Please, you need the money in. So in 1 or 2 years. Look, Um, you want it in 1 or 2 years, put it in a liquid fund or put it in a savings bank account. Anyway, that money, what is the big difference? Anyway, that money is going to be spent. It's going to go out of your hand. So, what is the big difference? Just don't worry about it. I was parking 10%. Can you please? I was eyeing this fund to park a small portion as tax implications after 3 years is better. See, this is the problem I have with a statement like this. You cannot say I need the money in a year or two, and you cannot say, excuse me, I need to stop this. You cannot. You got to be very, very clear about when you need the money. I mean, debt mutual funds offer tax benefit after 3 years, but you said you need you need money in a year or two. So you have to decide, and you can put some amount here, but please recognize there will be risks. That's all I can say. We'll forget that. That's for a government employee. For a tax filing, doesn't matter. Extremely narrow analysis. Yes. 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 Again, there's another comment which talks about how I should have there. They have a great tax record and all that. Yeah, fine. But that's again. I am recommending this fund with a credit risk disclaimer, but track record does not make any kind of difference in debt mutual fund space. In any mutual fund space, that's the reason why they have the past performance disclaimer. And if this fund is walking on a wire and it's playing with fire, there cannot be two thoughts about it. You cannot say in the past the person who played with fire never got his hands burnt. Therefore, in the future also he will not get his hands burnt. That's stupidity. I will not accept that at all. This is about the retirement plans, and this is a very important question. See, I have a video on retirement planning. It says 7 crores for retirement, and then 2 days ago I published a video saying creating an ideal retirement plan, and only about 1.7 crores. See, the big difference is the 7 crore video is for a young person whose retirement is about 20-25 years away. But for this creating an ideal retirement plan video is for a 55-year-old who is starting retirement. So there's a big difference in the age of the person who we are considering, and therefore there's a big difference in the corpus, 7 crore and 1.7 crores. That is, unfortunately, many people got excited that you need only 1.7 crores for retirement. No, that's 1.7 crores for retirement. It's for 55-year-old, not for people who are younger. Sorry. So that's the argument about that. Please explain about modified duration. I just talked about it. Let me say that again. Modified duration is a measure in years. If a fund has got a modified duration of 1 year, then if the interest rate changes by 1%, the NAV will fall by 1%. If it modified duration is 5 years, then the for a 1% interest rate change, the NAV will fall or move up by 5%. That is what modified duration means. That is when the interest rate increases, the existing bonds the value will lower. So when the interest rates increase, NAV will fall. When the interest rates decrease, NAV will increase. I'll talk about that again in another comment, and we'll talk about that. What is your view on Franklin short-term income plan? See, I mean, I don't have views. What will I do? Look at this is what I will do. So I'll just copy this. Let's go there. I don't have views on funds. How can I have views? I only look at facts. Let me go to Franklin short-term income plan. So this is a short duration fund. So first thing I'll go is I will not look at all these stars. I will not look at returns, nothing. The first thing I'll go is to go straight to the portfolio. First thing I'll look at is what is the average maturity. It's about 3 years. Modified duration a little bit less, about 2%. Look at the yield to maturity. That's 11%. So it's essentially, this is another fund which is playing with fire. Look at the portfolio, right? 45%, 47% is in A and below. So and clearly the NAV will be subject to severe credit default if it happens. This fund may have had a history. I don't remember too much names. See this. Can you see this? This drop is because of the fall, because of increasing bond yields. That is, what is happening is that oil prices are moving up, and people are worried that more oil, oil prices will increase a little more, and because of that, big investors don't want to commit money to long-term bonds. There is 2-3 years bond and so on. Therefore, the price of the bond is falling, and therefore the NAV is falling. This is not credit risk. This is just standard market risk. Credit risk. This fund must have had a history. I don't remember. I don't. I think this fund has also managed to. This is that's the credit risk right there. That's that fall right there. If you can expand that. When is this? Oh, this is June. This is not the credit risk. This is not. This is the bond crash in June in 2003. No, I think this bond is okay. This one 2006 probably. It probably had a issue with credit. More or less vertical drops in NAV you should look for there. That's definitely a credit risk. See, it's subject to that kind of thing. So I'm sorry, it's kind of painful to. So you must be ready to face this. That's definitely credit risk. This happened in 2016. Probably I don't know, Amtech Auto or Jindal Steel, something like that. I don't remember which one. Must be one of them. So it's a very risky fund. I don't for if it has got a modified duration of 2 years, that means that you should be using it for only like 6 years, 7 years, that kind of long term duration. But even then, you have to be careful before a couple of years before you need the money, pull it out. Otherwise, you are going to be in trouble. So it's a very risky fund. So please don't ask me what is my view. I am telling you how to review or what to look for in a debt fund. Please follow that. I am not going to do anything new. I'm just going to do the same thing, right? So, how is government security fund? You mean gilt funds? I have a video on options other than PPF, EPF, etc. A couple of days ago it was published. Have a look at it. I will talk in more detail about government, that is gilt funds, gilt mutual funds, and so on. Please make a video on ICICI Pru floating interest fund or floating interest category. I can do what is about floating interest category in general. We'll talk about that. Floating interest means, so like I said, this modified duration is a measure to indicate interest rate sensitivity. Suppose I want to avoid interest rate sensitivity. So in a floating rate bond, what will happen is, okay, let's talk about a normal bond. In a normal bond, let's say there is a 8% bond in the market that the mutual fund manager is holding, and the new bond that's available in the market is 10%. So when the new bond is 10%, this old bond which is 8%, the value will become less. So if I want to sell, therefore the NAV will fall down, or if I want to sell, I will have to sell at a loss. But it is marked to market, so the NAV will fall down. Suppose I don't want to, I don't want this, so then I will buy a floating rate bond. So what will happen is, the value of the bond will be the same, but the interest rate will fluctuate. That is, if the current interest rate in the market is 8%, then the bond will give you 8%. If the current interest rate has increased or decreased, then the interest rate of the floating rate bond will modify accordingly. Therefore, the value of the bond will not change. The NAV will not go down or loss. The NAV will not go up or down as much as in the case of a normal bond. It will go down much lesser. So if you look at this ICICI Pru floating rate interest bond, if you go to value research and look at it, since April, compared to this Franklin India short-term income fund or any other banking and PSU fund, the NAV would have fallen much less because it's a floating rate bond. I have not looked anything more than that in the ICICI Pru floating rate. I think it also has got credit risk. Be careful. All domestic, okay, this is a criticism I had talked about. I said different agencies had different credit rating scales. They say everyone has got A1 plus for short term and a AAA for long term. Point taken, thank you. But I remember seeing a small difference. That's the reason I mentioned. But it's okay, it doesn't matter. I will take your comment as fact. Thank you. Santosh has been saying video after video. Thank you, useful info. Thank you. Next time, Aditya Birla's floating and Franklin low duration fund. The reason I keep saying this, there's not much demand for such funds. So there is this comment here: a general video on good debt funds with good credit quality. This is the big problem with debt funds. If it is easy to find them, I would have made it. It is not easy to find them at all. See, the problem is, a debt fund can have 90% of AAA rated bonds, 5% of cash, and 5% of one bond which is A rated. That's it. If that A rated bond defaults, the whole fund will go down. So it's impossible for me to say this is a good fund with good credit quality and so on. It has become UTI banking and PSU fund. Look at what happened. It's a banking and PSU fund. It is supposed to hold 80% of bonds in banking and PSUs. Banking and PSU bonds. But it held 10% or so of 6% or so of the Shillong highway, and that defaulted and it fell down by 6%. See, this is it's so annoying. I mean, the debt fund investing is extremely annoying. So difficult to even. Personally, I am also walking on wire or playing with fire with my plumb line. I have several debt funds there. I don't know which one is going to default first. So I have been simply, lucky so far. Otherwise, people will come and say you said that it defaulted and so on. So that's going to happen. So Franklin low duration is far consistent than ultra short term. I don't know in what way. You'll have to tell me in what way. I think this video has gone on long enough. I probably must stop at some point. Let's see. Because I'm recording it in full HD. The sorry. Let me just. Okay. Franklin low duration fund also have got similar credit rating investments. I don't know. I've not looked at it. Yes, probably it is. Please review Axis Strategic Bond Fund. Used to be a long-term debt fund. I will have a look at it. Generic video on people who want to park money temporarily for equity rebalancing. Look, you stick to liquid funds or arbitrage funds. I have talked about it in detail. There's some thread here. We can look at that. Can I use Franklin Ultra Short Fund for 5+ years goals? Yes, you can, yeah, if you think you can handle the credit quality. They say HDFC. He says HDFC has got another fund which has got a better credit quality. Yeah, it's up to you. But this can happen wherever it happens, you must be ready to face the music, as I just mentioned. So now there's one more. Take a couple of more questions. It says, I want to invest for 3 to 6 months. 3 to 6 months. Don't invest in all this. Stick to liquid fund, please, please, please. Fine. I think I'll stop here with this. Fixed income products like FDs will have reinvestment risk. That is, the first time I buy an FD with 7%, second time I renew the FD, the interest rate is only 6%. That's called reinvestment risk. Yes, but there are, there is a diverse basket here in fixed income for retirees. Like you have senior citizens, you have post office savings schemes, you have fixed deposits, you have very good fixed deposits without any. So there is some spread. I prefer to take my chances in that spread. I think we can, at least as of now, we can compared to buying an annuity where the return is will be low for sure at 55, which is for this video, and it's lifelong fixed. Rakesh Gurbani says it's one of my best works. Thank you. Yes, Rakesh, you're young, so be careful. This is the comment I made about. So Rakesh actually wrote a guest post in freefincal. I think I think this is the same Rakesh Gurbani. So please have a look at it. So that's it, and. If you have any more questions, please let me know. I will conclude this already. It's gone on long. So I'll catch you again in another video. If you have any questions, comment, leave a response.